And welcome to today's morning report. Charles Prices on Wednesday, the 3rd of January, with me, Rich, Paramarket Analyst at Hantec Markets. We're looking at this market reaction to the New Year trading really today. It continues to be the fact that the dollar had been under pressure throughout Christmas. In the New Year period, it's just ticked up mildly higher today, but is it a move that really sort of will change the outlook? I'm not entirely convinced yet. I mean, that was a significant breakdown below the sort of 92.50, 92.75 key support band in the last few months that was seen. That broken support came at the end of 2017 and then basically continued yesterday. And that's sort of coming despite the fact that we've got treasury yields which have picked up. Certainly on the 2-year now, sort of trading above 2.4%. Now, that is all well and good, but that comes at a time at which you're also seeing other major global bond yields also picking up, and you can see here that the bond yield has picked up quite considerably in the last sort of couple of weeks, really, against the treasury yields. So that's helped to pull euro dollar higher, and subsequently euro dollar is over 50% constituent of or the euro is over 50% constituent of the dollar index. So subsequently we've seen dollar index sharply lower. A little bit of a rebound today as the treasuries have picked up a touch, as bond yields haven't picked up so much, but the market has certainly gone dollar negative in the last few weeks, and that is being reflected certainly in this trade weighted dollar index. Now, in terms of general market sentiment, we're still pretty positive on equity markets. S&P 500 yesterday closed at an all-time high, and also closed at the high of the day, so completely and utterly turned around that last trading day of the year. That we saw a sharp move to the downside, completely unwound, and we're looking pretty strong again now. The Dow has not quite sort of confirmed that move, but S&P 500 generally tends to be the big market mover. So certainly it looks as though that equities in the States have turned a corner and looking positive again, and you sort of seen that reaction in the European markets as well. The Dow and the CAC higher, FTSE basically flat on the day. But you can see this dollar positivity through euro dollar. Not a great deal of direction other than that, really. And we've seen gold a touch lower. Gold, which has been so strong in the last few weeks, as that dollar has weakened above 1310 yesterday on that gold price. So an incredible move to the upside that we've seen recently. But generally speaking, we're still pretty much holding the trends of recent weeks, as this dollar has weakened and equities have been fairly positive. So that's how we are looking at coming into 2018 now. So what have we got to look forward to for the rest of today? Well, we've got UK construction PMI, which has just sort of come out at 9:30 and is mildly missed again. So that's the second PMI for the UK for this year, for manufacturing missed, and now construction is missed. So that's not all that great a start. However, sort of sterling has slightly dipped a touch on the back of that, but it's basically flat against the dollar today. Now, we've also got this afternoon the US ISM manufacturing data, 58.1 expected. No real move on 58.2 from last month, and the FOMC minutes from the December meeting in which the Fed hiked interest rates by another 25 basis points. Not expecting too much of a sort of a reaction this evening, 7 o'clock this evening. But markets will be still sort of looking out for any sort of hints that the Fed might be sort of increasing its inflation expectations. And that will be the main sort of takeaway from that date or the FOMC minutes today. Now, my chart today is Aussie yen. Now, Aussie yen has been an interesting one because it's been in this strong upside move as the dollar has weakened and equity market sentiment has been so strong. Aussie yen is a very good indicator of general market sentiment because Aussie is a commodity currency. The yen is a very much a safe haven play. So subsequently you see the cross of those being a big gauge of market sentiment. Subsequently, we've seen a big rally in Aussie yen, but that rally of the uptrend has now been broken by this sideways move in the last few days, and you're starting to get a few sort of signs that of maybe rolling over. So this is a market that I would be looking at to see if it starts to roll decisively to the downside. Could that suggest that we'd start to see a bit of a sort of corrective move in sentiment as well? So we've got the RSI, which is at 70. It's holding above 70 still, and the MACD lines are still holding above neutral in a positive configuration, but they are losing a bit of momentum as this uptrend has sort of been broken. Stochastics have crossed lower, but not yet confirmed a sell signal, so this is still a little bit early to really start calling a corrective move, and it could still subsequently just be a bit of a post-Christmas consolidation which continues, and the fact that the market has picked up as the European trading session has kicked off today has sort of helped to improve the look of this chart a little bit after a few consolidating moves. So today it's trading not far off the high of the day, but needs to break out above yesterday's high, 88.40, to really sort of suggest that the market's back in sort of positive mode. That would open 89.05, which is that October high, but also continue the move sort of back within what looks to be a fairly sort of much of a bit of a range in the last sort of 6 months really on this Aussie yen. So yeah, we're looking at this recovery that has been broken, but today's candle could sort of help to bolster the bulls again. 87.65 being yesterday's low, that is a key support now near term, certainly given the little rebound that we've seen today. That now falls back and below that 87.65, that would be a move that could start to induce a corrective move to the downside. So watch out for that. But interesting moves on Aussie yen after this consolidation. So I wish you good luck in your trading, and I wish you good luck for 2018. So I wish you, and I'll speak to you later.